All right. So you sent us a whole bunch of stuff about these new UK audit rules for small businesses. And I gotta say, my eyes kind of glazed over at first. Accounting, not exactly known for being uh, exciting, right? But that's what we're here for, to figure out what really matters to you.
Yeah.
So our mission today is to basically like cut through all that jargon and see if these rules will actually affect you or like any businesses you work with. And most importantly, like what are the benefits and implications? Nobody wants a surprise audit, right?
Oh, right.
Okay, so first, let's decode this whole audit exemption thing. It makes it sound like you don't have to keep your financial records clean anymore. But that's not totally true, is it?
No, not really. Audit exemption just means some businesses, based on like their size and structure, they don't have to have a full audit done by some outside firm.
Mm-hmm.
But keeping good records is still a must.
Okay, so why do we even care about audits? Why are they so important?
Well, governments require audits to make sure everything's transparent and to protect investors and maintain a stable financial system. Think of it like a safeguard against companies, cooking the books.
That makes sense, like a checks and balances for businesses.
Hmm.
So how do we know if a business qualifies for this exemption? I saw this blog post from MA and CO accountants, and it seems like there are some thresholds you have to meet based on like turnover and balance sheet and employees.
Exactly. To be eligible, a company needs to meet at least 2 out of 3 criteria.
2 out of 3. Interesting. So what are those magic numbers?
Well, first, your annual turnover can't be more than £10.2 million. Then there's the balance sheet total, which has to be under $5.1 million. And finally, you can have 50 employees or fewer.
Okay, so there is some wiggle room,
Hmm.
but you can't be a giant company. The thing that really stood out to me was this potential savings number. The blog said 20,000 to 50,000 pounds every year. For a small business, that could be huge.
Oh, yeah, for sure. That kind of money, could be reinvested into growing the business or even just giving employees a nice bonus.
Yeah.
But there's another side to this we should talk about. Voluntary audits.
Voluntary audits. Why would you choose to get audited if you didn't have to, especially when you could be saving that much money?
Well, it might seem strange, but there are some advantages. Think about it from like an investor's point of view. A clean audit report is really reassuring. It's like a stamp of approval from someone independent.
So it's all about trust and credibility.
Exactly. It shows you are committed to transparency. And that can really matter when you're looking for funding.
I see. And speaking of real-world examples, the blog had some really cool case studies, like this tech startup in London saved 25,000 pounds and put it all into making new products.
Oh, wow.
That's awesome. Right. Then there was a manufacturing company that chose to get audited even though they didn't have to. Why would they do that?
They wanted to get banks and investors excited. They knew having a good accounting firm vouch for them would really help, especially when you're trying to get funding or grow the business.
So 2 different approaches, both with their own advantages. But just when you thought everyone could escape audits, there are some exceptions to these new rules. The blog mentions regulated industries like banks and insurance. They still have to have audits no matter how small.
Yeah, that's right. Those industries are super important for the whole financial system. If one of them messes up, it can affect everyone. So mandatory audits help manage the risk and protect consumers.
It's not about punishing specific industries, it's about protecting the whole economy. What about subsidiaries of bigger companies? Do they automatically get to skip the audit?
Well, not always. A subsidiary can qualify only if the parent company guarantees their debts. It's a way of making sure they're accountable even without being directly audited.
Okay, so let's recap what we've learned. These new audit rules are designed to help small businesses in the UK. If you meet at least 2 of the criteria, you could potentially save a ton of money.
Right.
But it's important to think about the benefits of a voluntary audit, too. It could help you with investors and build stronger relationships.
Definitely something to consider.
So it's about finding that balance, right? Making the right decisions for your business. And that brings us to a question for you, our listener.
Yes.
If you were running a small business in the UK, how would you decide? What would be most important to you?
That's a big decision.
Yeah.
And there's a lot to think about. It all comes down to your own circumstances and goals.
You know, it's interesting. Thinking about all this stuff with audits and these new rules, it's not just like boring accounting stuff, is it?
Yeah.
It really gets to like the core of how businesses work,
Yeah, you're right.
how they build trust, how they show they're accountable.
It all comes down to that independent assessment, giving everyone, investors, lenders, employees, a reason to believe in the number.
It's like a seal of approval, right?
Yeah.
Saying, hey, we're legit, you can trust us.
Exactly. That's what a good audit firm does, brings that independent view. That's so important for trust.
But I've read some stuff that, questions the value of audits, especially after all those big accounting scandals. Some people say audits have become like too routine, just checking boxes instead of actually finding problems.
Yeah, I've heard that too. And it shows that auditing needs to change. We need to make sure audits are really protecting against fraud. It can't just be going through the motions.
So we can't just blindly trust an audit report. We need to really look at it closely.
For sure. That's where professional skepticism comes in. Auditors need to question everything. They can't just take things at face value. They got to dig into the details,
Yeah.
and be ready to raise a flag if something seems fishy.
So you got to be part detective, part accountant.
Uh-huh. Yeah, something like that. Connecting the dots, seeing the big picture,
Hmm.
and not being afraid to ask tough questions.
Being that independent voice, keeping everyone honest. Which makes me think about conflicts of interest, like when the auditing firm is too close to the company they're auditing.
That's a big one. One of the biggest challenges in this profession, if a firm depends too much on one client, it can create pressure, you know, pressure to not rock the boat.
It's like, don't bite the hand that feeds you, but aren't there like rules against that?
Oh, there are, definitely. But rules can be worked around. And sometimes it's not even intentional. It's just unconscious bias.
It's hard to be completely objective when someone's paying you, so how do we fix that?
Well, people are trying different things, like rotating audit firms so you don't use the same one forever, or being more transparent about fees and stuff so investors can see what's going on.
Shining a light on the whole process. And I bet technology is changing things too, right? With all the data and AI, we should be able to catch problems more easily.
You're absolutely right. Technology is changing everything. AI can analyze so much data, find patterns we might miss. And blockchain can make everything more transparent, harder to manipulate.
Like giving auditors a superpower. But you still need human judgment.
Oh, 100%. It's about finding that balance between tech and human expertise.
Embracing innovation, but sticking to those core principles. It's a fascinating field. But maybe we should shift gears a bit. Talk about what all this means for small businesses in the UK.
Okay, sounds good. Let's start with materiality. Basically, it means focusing on the things that really matter, the stuff that could actually impact the business.
Cutting through the noise, right?
Right. And for small businesses, that's even more important. They have tighter margins, less resources. They can't afford to waste time on audits that don't matter.
So it's about making the audit fit the business.
Yeah, and that's why communication is so important. The auditor needs to understand the business inside and out. And they have to explain their findings in a way that makes sense to the owner.
It's like having a partner, not just someone checking your books.
Exactly.
Speaking of which, what about those simplified financial statements? Seems like that could save small businesses a lot of headaches.
It definitely could. It's a streamlined version of the full financial statement.
Less paperwork, more focus on what matters. Sounds like a win-win.
It can be. But you still got to follow the rules, be accurate and transparent.
Streamlining, not cutting corners. And technology can help with that, right?
Oh, for sure. There's so much software out there to help with this stuff. It lets business owners focus on what they do best.
Using tech to simplify things. And speaking of transparency, we should talk about communication in general, because at the end of the day, it's about talking to people, right?
100%. Investors, lenders, employees, everyone. Clear communication is key.
It's about telling your story, explaining what the numbers mean.
Yeah, and being honest about the challenges too.
Authenticity matters.
People can spot a fake a mile away.
Yeah.
Be upfront about the risks, the areas where you're still working on things.
Be real, be human.
That's how you build trust.
So we've talked about a lot. Audit exemptions, the value of audits, trust, communication. But before we finish, let's go back to the future of auditing.
Okay, yeah. It's a constantly changing world with all the new technology.
AI, blockchain, all that.
Right. But we can't forget about the human side.
We can't just rely on algorithms. It's about that judgment, that skepticism, that ability to see the big picture.
It's what makes auditing more than just a process.
It's what makes it valuable.
Finding that sweet spot where tech meets human expertise
A future where audits are more efficient, more insightful.
and help build a stronger economy.
It's an exciting time to be in this field.
It really is. We've covered a lot today. Audit exemptions, the role of auditors, trust, transparency.
And hopefully given you, the listener, a better understanding of it all. So, what's the key takeaway? The world of auditing is changing, but the basics stay the same. It's about accountability, being transparent, and building trust. Whether you're a small business in the UK or an investor, ask the right questions, get good advice, and do things the right way. And if you're ever lost or confused, remember, the Deep Dive is here to help you make sense of it all. Until next time, happy diving.
Yeah, it's amazing to see how tech is changing things, isn't it? But like we've been saying, it's not just about robots and algorithms.
Right, we can't forget about the humans. But I'm wondering, can auditing be more than just a compliance thing? Can it actually help businesses change for the better?
That's a great question. And I think, yeah, absolutely. When audits are done right, they can be so much more than just checking boxes. They can really help businesses find ways to improve, make things more efficient, make better decisions.
So it's less about like policing and more like a helpful service.
Exactly. That's what we call value-added auditing.
Yeah.
It's not just about the numbers. It's about helping businesses grow.
So it's like having an outside expert come in and give you a fresh perspective.
Yeah.
They can see things you might miss, like inefficiencies or risks.
And they can give you advice on how to improve things.
Especially helpful for smaller businesses that might not have all the resources.
Exactly.
Like having an extra set of eyes, a secret weapon. But we've got to be real, audits cost money, right? And they take time. So how do businesses, especially small ones, decide if it's worth it?
That's the big question. And there's no easy answer, unfortunately. It really depends on the business itself, how big they are, what industry they're in, how much risk there is, and what investors or lenders require.
So it's a trade-off, basically, weighing the benefits against the costs.
Yeah.
That's where having someone you trust to advise you is really important, someone who understands your business and all the rules, like an accountant or a consultant.
Absolutely.
Okay, so let's bring it back to the UK. With these new exemption thresholds, some small businesses might think, okay, great, I can just skip the audit, save some money. But as we've been talking about, it's not that simple.
Nope. Just because you don't need an audit doesn't mean you can ignore your finances.
Right.
You still got to keep good records, prepare those statements, be ready to answer questions.
And maybe even consider a voluntary audit, even if you don't technically have to.
It could really help in the long run.
It all comes back to trust, right?
Yeah. How do you show people you're doing things right?
How do you show them your business is legitimate and trustworthy?
It's about building a reputation, step by step.
Being transparent, being accountable.
That's something no law can force you to do.
So we've covered a lot today. Audit exemptions, the role of auditors, trust, transparency, the whole world of business, really.
It's a lot to take in.
But hopefully you, the listener, have a better grasp on things now. So what's the big takeaway? The rules might change, but the core principles are always the same. Be accountable, be transparent, build that trust. And if you ever need help, there are people out there who can guide you. Like MA and CO accountants, they're a great resource. All right, that's all the time we have for today. Thanks for joining us on The Deep Dive. Until next time.
Happy diving.